Good morning, everyone. Microphone check. Screen check. There we go. Yeah, okay. For whatever reason, it wasn't registering there for a second, but I think we're good to go now. Welcome, welcome, welcome. Hopefully everyone was able to rest up, get ready for the day ahead and all that fun stuff. As always, before jumping in on the left side of the screen there, make sure to read through the Live Trader Morning Prep PDF. Very important to go through and understand everything that is inside there. If you need to read through that with a little bit more time, feel free to pause the video. You'll be able to watch it there. Just a quick note for you all before we jump on in. Please keep in mind that the YouTube broadcast does have between like a 5 and 30 second delay depending on where you're logging in from, which can definitely impact the timeliness of what I may be talking about. I do try my best to talk about things as quickly as possible, but delays are delays, right? Also, just want to take a second to give a shout out to the latest members that joined in the overnight, yesterday afternoon, etc. Thank you so much for the support. I'm pumped to have you on the SSFTG family. If you aren't a member yet, you do have a few different options to check out that are available for you if you are looking to further your trading education, your trading career, or you're just looking for a cool chat room to hang out with a bunch of like-minded traders. Here on YouTube, you can check out the join button below the stream. The YouTube family gains access to the extended trading room session. That usually goes from like 10 to 10:30 to 11, depending on how things are going. Yesterday was real slow after things calmed down, and then fireworks hit again. Every member gains permanent access to the Discord chat server, and of course, you get the awesome badge next to your name here on YouTube to show your support. To understand what it is that we are doing, look no further than the Day Trading Academy. Listen, this isn't a small PDF guide that you're going to finish in an afternoon. It's something that you're going to have to really sit down and work your way through. It's 19 plus hours of course and study material, guides, homework, review, all kinds of stuff. So if you're looking to really further your trading education or at least understand what it is that we are doing, really, really great place to start. And then, of course, finally, the big kahuna, VIPs. VIPs have exclusive permanent access to our non-delayed stream, covering the entire morning session from 9 until whenever we end, to ensure that you're on the fastest connection possible and that you also don't miss any beats along the way. Alongside that, VIPs also have access to our monthly webinars. There's one coming up this weekend. Really excited about this one. I left it purposefully cryptic with an acronym. So you VIPs, I know I've already gotten a couple questions about what does that mean. It's a surprise. Right? Enjoy the surprise. It's coming up this weekend. Private VIP events, one-on-one scheduling access, all kinds of cool stuff. So whether you're here for the very first time or you are a seasoned VIP veteran over on the Zoom stream, welcome. I'm glad to have you trading alongside me today, analyzing these psychopathic markets of ours. Let's take a look at what's going on today. Don't forget to grab your morning DP levels. Those are posted for you this morning, covering the major 7 markets that we take a look at. So you've got all of your major zones of interest for today. As we zoom down a little bit further, we can take a look at the news calendar. Now, from the news calendar side of things, we do have news at 8:30. That was the current account for quarter one. It's a medium number. Came out negative 206.8. If we go beyond that at 10 o'clock, at 10 o'clock, we have FOMC member Bowman speaking. Oh no, sorry, 9:10. That really threw me off. Okay, that's a new one. 9:10, FOMC member Bowman speaking. And then at 9:45, you've got a small little block of news. That's the manufacturing PMI, market composite service PMI, all that fun stuff. 10 o'clock, that's the big news for today. We've got the new home sales for May forecasted 870,000. We do also have crude oil inventories today at 10:30. The forecast for that's negative 3.942 million. We'll get into the API report here in a second to give us an idea as to what we're looking for on the inventories. After that, we've got 11 o'clock FOMC member Bostic speaking. And then at 16:30, FOMC member Rosengren speaking. So if we jump back and take a look at... Get that out of the way. So what I like doing with the crude oil inventories, if you're unfamiliar, we go to yesterday, and every Tuesday, well, unless Monday was a holiday, but every Tuesday at 16:30, we have the API weekly crude oil stocks. And this gives us a really good idea as to what to expect is going to happen next for the crude oil inventories. These are usually much more accurate than the estimates from the inventories. Just saying. The actual is negative 7.199 million. Just a little bit bullish. Buyers coming in heavy. Negative 7.199 million is the API report. And if we look at today, Notice the API report yesterday was also a -3 something, whatever it was, forecast. Came out at a -7. This is giving us a heads up of what to expect, right? This is the massive intention of the bulls coming into crude oil, in that they're going to be looking to buy every dip, and preferably on news days. If it's expected to be a bullish day, what a lot of traders would love to see is for the market to come down and allow them a better value so they can buy into the news and then shoot it up to the sky. Let the news kind of do all the hard work for them. We'll see, but at the moment, it is anticipated to be a very bullish number, likely around -7 to -6, if not higher. And then just kind of a general overview as far as what's going on across the board, but we'll cover that here. So looking at the NASDAQ first, we'll kick off that. We've got a very nice continuation to the upside. This thing just doesn't stop. We were a little bit concerned yesterday about these, let's try yellow, about these 14,200s, because that thing was, I mean, it was a brick wall up there. It looked like it was going to be impossible to work through. Well, you know, NASDAQ, when you say no or impossible to it, it says, haha, try me. Just wrapped right through that thing. Not even a flinch. Just chopped it. Once it popped back above that, realistically, a lot of traders who were potentially short here, we know they were short there because there were tons of POCs up there. They got their objectives to the downside. If they didn't take their profit down here, they were given one more shot before rotating all the way back up to the upside. And with that big rotation higher, massive trap low, 3 press wedge bottom, undertow the whole way up. I mean, it's not much of a surprise, right? The difficult part was getting through that 14,200. Now that we've racked through that one, we can see if we can get a little bit of a pullback through 14,200. But realistically, one thing that a lot of markets like doing is pulling back to the previous zones of interest where there was a lot of, well, in this case, sellers trying to hold the market down. So if we go all the way down to that low, we can kind of gauge where the sellers were if they are still in short. And this gives us the biggest clue that you could ever ask for on the planet. Are sellers still short? No. Period. It's a hard no. They already got out. If the sellers were short, they are not stuck. They broke back down. They had all of their objectives. The POC rallied to the bottom. They broke back up, came back down. There are no shorts that are still in this. Right? I mean, let's be real here. If anything, that is just longs reloading for a continuation move to the upside, and that would be a logical place to see the market want to pull back to if it's going to want to pull back. Let's go back a little bit further here. Bug data, cool. Let's go to the 3 press higher low then. Ooh, they missed it. Ooh, they missed it. If they're going to pull back, look at how nice this would line up, right? I know settlement's way up here and the market's incredibly bullish and we're probably just going to go nonstop to the upside. Let's be fair, right? But think of how nice this would be, given that we have a previous POC here and a previous POC here, which is proven, and the fact that they broke back up and missed this one. What better spot to slide down to, grab that -1 DP, fill in that POC, and stop out all of the traders who had their stops underneath that low just to hand them right over to JP Morgan. So if we can get a flush down today, honestly, a flush down to like 14,050 could be incredible. That would be a really nice zone for buyers to try to pick it back up and kick it back up to the sky. As far as the S&P goes, we have that confirmed V bottom off the lows. I mean, this thing just isn't stopping. If we look at the overall movement from the bottom to the top, the POC, once it loads up, there we go, 42.1350. Now, this hasn't changed from yesterday, but you can see they did make a very strong attempt at it. The market, I mean, look at this. The market did not spend a lot of time there, but they rivaled the volume of the POC. Right? That's a big deal. Like, in this case, it went through, so more likely a lot of profit taking. But that's a huge amount of selling that's taking place inside there. If the market's going to want to pull back, considering we haven't shifted a POC back to the upside, and the fact that this high is looking mighty weak, might be able to see maybe a roll back down again. 42.1350. That's also the -1, which lines up nicely with the NASDAQ. Problem is, if they can't hold it here, whew, man, it's a wide open door. There's nothing to hold the market anymore. So if they can't hold these 13s or even the 4200s, like we can back off a little bit down to the 4200s. If they lose Bye, Zig. If they lose the that POC cluster and those lows by too much, it's game over. There's nothing that's going to hold it up anymore. The only hope they have, and it's a hope, like really throwing it out there, it's a hope, would be that inside support at 41.90. It does line up with the negative 2 DP, so if it were to slide down there today, probability-wise, that would be a really nice spot. Gold. It hasn't moved. I mean, obviously the POC is going to be at the bottom. The market spent a half a century down there. But if we climb this back, I wonder if that's been enough time to take it back from the high. Not quite. Man, they're getting close, but not quite. 1895 is still the POC on the high. As far as the next potential POC, I mean, they got a long way to go yet. Maybe another 30% before it's even a 1-to-1. So, I mean, gold is hanging out here for a really, really long time, but the POC is still up at the top. It's like nobody's doing anything down here. There's just no volume. Over on crude oil, obviously the market's continuing to the upside. We've got some very bullish or likely to be bullish numbers for today. The anticipation would be more continuation to the upside. If we're looking at the way that this is kind of moving, fairly obvious. We've got some rising resistance ahead of the market that's trying to kick it back down. Notably, along with that, we do have some, although very, very weak. I can't even let go of the drawing because it'll make it flat. But you can see as it's flat, there is a lower high there, so technically there's an undertow, although the slower one does not have that. So as far as like a reasoning as to why the market is struggling up here or why the market should pull back, I mean, there really isn't one yet. We haven't really been given a clue other than the potential weakness up in the highs here that may require the buyers to reload if they can't stick the landing. I mean, you can see what's going on. Very, very obvious wedge. And if we creep this to the upside, it's even a bit more obvious. I kind of wish I could park it like that. Oh well. See if we can get down back to settlement. That'd be a nice spot for crude. Over on the euro, we finally broke out of that little bit of a funk that was going on and popped higher with a very aggressive rally. If we look at the bottom-weighted POC, which that's where it was, there's a lot of price action to the downside. Remember, before they actually had some time to settle down here, the POC was up here, 21,450. That was a huge zone of interest. Now, as time goes on, with this higher low that we have, was that enough time to shift? It was not. Very important information. Now, if we go all the way to the end, all the way to the end was enough. And notice where it shifted, right? If we bring this back a little bit, they did not shift. We go into the next day, they did not shift. Let's zoom in a little bit closer, and let's see, where did that POC actually shift? Because it looks to me like the POC shifted after they got out of break even. No POC change yet. And then we include that bull bar on the bottom. All of a sudden, there's a POC shift. Do you need it to be more obvious? I mean, the way that worked out is just ridiculous. Now, keep in mind, this is not the impulse POC. So as far as the impulse POC, the market is still going to be looking to try to rally back up towards that 21,450. Wait a minute. That is bug data. Hang on. Okay. 21,450. But given the fact that we have this drastic POC shift down here and it happened there rather than anywhere else, right? That's a big clue. We're seeing a shift. That doesn't necessarily mean that the sellers are totally done or that the sellers are out of the way, but it does mean that they are in for a fight if they're going to try to take it back. Especially considering that we now have consecutive higher highs. They got some work. Over on Bitcoin, it's a huge V bottom. This isn't a surprise, right? We knew that the market needed to pull back. I wanted it to drop to 20,000. I wanted a big tank. This thing just to get annihilated, but As soon as they broke underneath 30,000, it absorbed like crazy and just shot right back up to where it was before the drop. Actually further up than before the drop. So obviously, bulls just utilized that dip underneath 30,000 to retest the previous low. They bought the major dip and screamed it right back up off of 29,000. Basically just bought it 1,000 under 30 and ripped it all the way back up. Nuts. Over on Ethereum, I was looking more so for the 1,500 area, but we're certainly not strangers around the 1,750 area, which is where it ended up bouncing. Big V bottom off the lows, although not as strong as Bitcoin, to be fair. We are seeing a pretty nice lift to the upside with some slight concerns of maybe a wedge top. That wedge top could also be a lot more aggressive. Kind of got to wait and see. All right. 1 second here. There we go. There we go. Okay. Sorry, I was having an issue with the broadcast. It wasn't sending. Okay, got that. All right. Looking at today as far as what's going on from the bigger picture, we've got a relatively, I mean, they're stacked. We've got the Asian and Euro session right on top of each other. It looked like it was going to be a really strong rally up. I just gave it all back. Started with a cycle up to a new high and then dove all the way down to a new low. 2 new lows, actually. And with that drive to the downside, we still haven't seen the buyers crack above any previous highs. So from a trend perspective, although this is very obviously a range if you're looking at it from there, with this sideways momentum, what from the bigger picture could this be? This may very easily be nothing more than an accumulated stop run. So if it does want to pull back to those 14,250s, that would be the zone of support to try to kick the market back up and try to rally it back up towards, maybe a swing long, try to get something going for a longer term move back to the highs. Now, if that doesn't hold, then we've got that bigger drop down to the 200s. But we're hanging out here at the moment, and there's not really much going on, to be fair. Starting off on the daily and looking at what's going on here. From the daily perspective, we did have a very strong bull bar closing into the highs. And with that strong bull bar, this is one of two things that this is going to potentially spark. Remember, we were talking about this area and how we may get stuck here for several weeks. They've attempted to break above that. If this fails and goes back inside, we're likely just going to go right back down to the lows of the range. If it keeps going, right, and we get another really strong bull bar to the upside, then very likely buyers are going to be looking to buy the higher low pullback somewhere around the range top. So today is kind of like is the story that's progressing. We've got to kind of wait for today to tell us what to expect. And that will give us a lot better clue as to for tomorrow. Right now, I have to gauge on the side of more likely range bound. Realistically, every time the market has pierced into the highs with a really strong bull bar, there's been a halfway decent pullback afterward. Unless it was followed up with a really strong bull bar. If it was followed up with another strong bull bar, then it keeps going. And that's why today is so important. We need to see how this closes. We've got the first big bull bar up into the highs. What do they do from there? I have to initially focus on it as a range. But, if we start shifting, if we start shifting higher, confirming new swing highs, there's definitely a reason to want to go long. Over on the 60-minute, as far as the overall momentum is going, there's the POC up on the highs. Fairly obvious that they got their targets to the downside, and also very obvious that they tried defending it. A lot of reinitiation on that sell side. So those POC sellers definitively attempting to defend it at least didn't really do much before cycling all the way back up. And that's the important part, because when we look at this, when it did break higher, it never pulled back. Markets don't like that. That's like an inefficiency. It's like unfinished business. It's got to try to get something done. And, well, that makes it a lot harder. So it would be nice, again, to see that little bit of a pullback to the 200s or slightly lower. But if it wants to stay bullish and we get that secondary bull bar today, we could be in for a really strong rally. And on the 15-minute chart, let's look at that last pullback. Just going to be right there. All right. From a cycle perspective, we've got the attempted bullishness off of the lows, which, I mean, I guess was an L4. What nastiness that was. L3 into an L2. They're just climbing the ladder. They tried getting the L1, but the L1 did not hold. That was going into the overnight session. Pulled back a little bit further into the L2, continued back up. With that disappointment, remember, climbing the ladder, it should go 4, 3, 2, 1. And then from there, it's just, usually it doesn't even pull back to 1. It just keeps going. That's the parabolic blow-off. When it came time to get the parabolic blow-off, well, they pulled back too far. It went back to L2. That's not what traders wanted. So when it starts migrating back to the upside again, they all start exiting. And we see this lower high formation and then a dive all the way down to the lows. That's a full failed flip all the way to the base. And usually with those full failed flips, sellers are looking for L1s in the opposite direction, which is what happened here. More continuation to the downside before getting a new low that came back to the L2. Rotated back down and broke lower. Now this is the one that we're hanging out on here. We just cycled off of L3 and we're kind of climbing the ladder backward here. We started with the 1, then we went to a 2, and now we're back to a 3. We're kind of going the wrong direction here. We're creating some difficulty. We'll see what they're able to get done, but that doesn't help things, that's for sure. Got the open around the corner here in about 8.5, 9 minutes or so. All right. So sellers are trying to hold the L3. Even if it is a little bit backward. One area of interest from the swing long perspective, this is what we were talking about if they are going to hold this base. This would be a broken L1 right out of the playbooks, right? Go back into the DTA, chapter 8, or no, unit 2, chapter 8. This covers exactly what we're looking at right here. It's everything that the buyers need to try to rotate back for a swing long. Well, actually, it wouldn't look like that. It would look more like this. But buyers are going to be looking to buy down here, knowing that they can get away with some halfway decent risk reward. And to stop underneath the lows, if they're trying to modify their entry as much as possible, an entry around the 255s, 254s would put a target ahead of the L4, and we are climbing the ladder backward, right? We went from 1, 2, 3, the next one to be 4. I want to make sure to get my target out ahead of that. So buyers will be buying into this from a swing long perspective, anticipating that they don't have to risk very much if this is going to be a V-bottom for a continuation rally back up for a solid 2-to-1, if not a lot more. Give me 1 second. All right. Right around the corner here for the open. Market's a little bit slow. all things considered, so far. Let's see what they want to do. Zones of interest, a little bit zoomed out more. I mean, again, crude oil, I'm much more interested in being to pull back down to settlement, 72.84. Gold is an absolute train wreck. I feel like I don't want to touch gold at all. The euro has to really stay above the 19,350s. It's okay if it dips underneath it a little bit, but realistically, the bulls want to keep it above that. If it starts losing ground underneath it, then sellers are going to be looking to reverse it back down. The only other thing would be a halfway decent pullback on crypto, but everything's kind of stagnant at the moment. Nice dive down. There's the buyers from the swing long. So the swing long buyers are taking it back to the upside. We saw, I mean, look at the wick, right? Even if they aren't successful, you can see them buying. $9.28 is the next big zone of interest around the corner here. See if these sellers can get a bit more continuation through this L1 low, or if the swing longs are going to try to take it higher. I mean, realistically, we know where the buyers are if their stops are in play. If they're buying here off the lows of L1 to try to get this to reverse back up, their stops are going to be underneath the base. So, as long as it doesn't break that, the bulls still have an attempt. But if it cracks the low, it's going to make it a lot harder. Got 3.5 minutes until 9:28. Oh man, we're getting real close here. This is starting to get into sketchy territory. Give me 1 second here. My son needs some help, and then we will head into the open. All right, just in time for the open, huh? All right, a little bit of back and forth. There's not a ton going on. But we are getting some jerky, herky, poppy, sloppy, whatever you want to call it at the open. Again, remember, longs, they are going to be buying down here, right? We've already talked about that. Longs will be buying down here for swings back up to the L4. We're climbing the ladder in inverse. So looking for an L1 to 2 to 3, looking for targets up ahead of 4 would make a lot of sense. Low probability, high reward versus risk. That's the compensation. If we're looking at the overall opening movement so far, I mean, there really hasn't been a whole lot, but just kind of chopping. See if you can get a little more continuation back up. Or not. What is that candle? Yikes. That candle just disappeared. We're at the range lows. And if this is going to be a long, this is precisely where buyers are going to be picking this up. So I do not want to sell here. This is a horrible spot to sell. Can you put the risk reward tool back up? That was... Oh yeah, for sure. So the where was the risk reward? It was with a stop underneath the low. Oh, a little lower. There we go. That's what the trade setup was that we were talking about a little bit earlier there. I mean, look at the entries. Nice little pop up into the target area. So from the swing perspective, if the bulls did take that long going into the open, you know, the risks going into the open, but they did get their objective. So seeing this pull back like this makes sense. Everybody just took profit. Why wouldn't it pull back, you know? So this is kind of the same concept. If it's going to pull back a little bit further, buyers may likely reload again off of that 255 area. But this is why when major objectives are hit, you always hear me talking about you can keep buying until objectives are hit. This is why. When an objective hits, stop buying. Ooh, nice little dip underneath that previous bull bar. Let's see what they want to do. We're hovering around settlement. We just poked above a new high, and this is a valid new swing high above a previous confirmed high. That's a big trend change potential. This is exactly what buyers need to see. I mean, obviously the buyers already got their targets, but this is what they need to see. Another strong bull bar for continuation back to the upside. Very nice little scalp there. Okay, just keep going without me. That's fine. I was only able to get one. See if they can get a quick little snap back, but we're back up into the target area again. So I've got to see them kind of migrate through here. If we're looking at it across the board, we're still above. Come on, NASDAQ. Just need a little bit of a pullback. S&P catching a nice rally to the upside. The concern for the S&P is going to be the high closes and opens. That's at 43.75 from yesterday. Those typically cause some issues. ES is like frozen, seriously. It's just dead in the water. Look at the 2000 tick. This is the beginning of the day right here. Remember I was saying, like, on a tick chart, I like seeing about a full page and a half for one day? Yikes. This thing is just pinned to the ceiling right now. Bulls demonstrating more continuation back up. We have made it to the, I mean, obviously we made it to the L4, but now I feel like we're climbing up into the 5, yeah. So we've gone further than climbing the ladder. Remember before we were talking about how we had this full flip. Whoops. We had the full flip over here. We broke down all the way lower L1. Then it was an L2. Then it was an L3. We're climbing the ladder backward. Upside objective into the L4 makes sense, but now we're hitting 5s. Something's changed, right? Something's going differently. Got an L4 off of the lows with a continuation up into a 3. We're climbing the ladder the other way now, except this time they hit a 1. So I would like to see a 2. Only 196,000 volume for the ES. Yeah, it's dead quiet. But we'll see what they're able to accomplish. Got the first 5-minute bar out of the way on the NASDAQ. That is a heck of a candle. Wow. 78 is the POC. So far, if we're looking at a value pullback, at least, the only one that we have would be here, and none of these have even come close. Hanging off the Euro session highs and having some difficulty. Zone of interest would be back into the 78s, but that zone might be a bit contested ahead of it as well, because that's also where the bull bar triggered above. So 80s to 78s is kind of the hot spot. And visually, that also looks like that would be about an L2. Yep. So, I mean, that's everything we're looking for. We just got to see how they show up to the party. If they slide down a little too aggressively here, this remember, we could still be in a range, and we're cycling off of the highs of it. See if we can get a little bit more than this. Okay. This is a consecutive string of bear bars and dojis to the downside, so being the first one to the party could cause some trouble unless it's a washout. If it's a washout, those typically end up as V-bottoms and they don't come back. So... But honestly, I would kind of like to see them show a short-term bounce and then push back down to a new low underneath that bounce, just for more of a structured approach. More bullish continuation. We have a POC down at 86.50. More likely that buyers try to defend that area. We do have that bounce off the lows. It's kind of giving us what we wanted to see. Ooh, not that though. POC shifted up to 91.25 now. I'd have to give it a minute. See if they can make another leg down. Ooh, closed above it, but then the next candle gapped underneath it. What a funky transition. Bulls closing above it's going to be a very strong indication of them trying to take this higher. We do also have, they weren't able to close above it, the inside bear bar on bar 2 for the S&P. What is happening? 91.25 having a tough time trying to break back above that point. More likely they're going to try to break back down to that blue box area. Especially now with that failure. May even try to go for a two-legged response. Which would be just a hair lower. So I'm going to approach this like here. I'm going to migrate the box down a little bit. I know I might miss it because the buyers may defend and just never give me a chance, but if we see that happen, then we should see the POC shift to the downside or at least slightly lower, showing that the buyers are attempting to defend. Well, okay. there that is. Where do they close? They closed above it. Nice bull bar back up. The POC did shift to the downside, and that might be all they wrote. I'd like to see a little pullback sub-90s at least for the bulls to try to kick it back up. But honestly, I would almost rather see another bull pulse because we are holding off of the euro highs. I don't really want to get stuck holding a bag trying to buy too high. Yeah, see? Now this thing's hammering down. I'm going to cancel my long and give it a second here. I want to see what they do with this. That's a huge bear bar coming off the top. And it's a range day. Big bear bars are usually faded, but notice what they pulled back to. They hit the bottom side of the POC, and we're seeing rejection back lower. Potentially a clue that this market's going to slide just a bit further down. How about the 5-minute ES? The 5-minute ES is, I mean, we have an inside bear bar after an inside gap up. You know, I mean, that's about as range bound as you can get. Selling below an inside bear bar during a range is, I mean, not an option whatsoever. Buying and engulfing, like if it traps down and then goes all the way up, is also not very much an option. But I mean, at least you'd be going with a larger trend if you went that way. You know, the inside bar here doesn't really show much other than consolidation, which we already know is an inside gap up. We've done nothing. So, I mean, for the S&P, I would rather look to fades. Man, the sellers who tried shorting bar 63 yesterday could be a nice little spot if they can get out of break even 32.25. Fade the lows, fade the highs. Buyers trying to creep back above the POC here at 86.50. Come on, NASDAQ. I think I can. I think I can. A strong bull bar? Nope. Not it. See if they want to retest the 86.50s as a support zone. You know, I'm kind of curious. It's something that I don't use hardly at all, but in those rare situations, like right there, the time and sales might actually be relatively useful. Hang on, really strong bull bar here, bull engulfing. I'm going to look for a continuation to the upside, understanding that buying way up here can be difficult, because remember, we're fading off of the range highs. So I would like to see this pop relatively quickly, and if it's not able to, a back off to 86.50 would be a much nicer rebuild to add a little bit more. As it stands, if we can get a jump back up towards like the 96s to 300s, that's the objective at the moment. But realistically, if it can give a little bit more of a pullback, that would be higher objectives. More bullish continuation. Beautiful pop. That's what we wanted. Right back up to the euro highs. Fantastic. Again, they haven't broken the euro high, so I have no reason whatsoever to try to hold through them. But I'll hold up to them. Now, hey, now that bull bar back up, bar 3, that bull engulfing on the S&P, it's still an inside bar 1, but it's an outside bar on bar 2. So we've got like an outside, inside, outside, this transition. Bulls will be taking this breakout to the upside, or that's what they're going to be hoping for, is a breakout to the upside on that outside, inside, outside transition. If that fails, we're likely going to drop back down to a new low, maybe below candle 80 from yesterday. We are attempting to get above the euro highs. Or, yeah, euro highs. What a mess up here. Man. Couldn't quite get the two-legged correction back down a little bit further. At the open swing long was a feasible opportunity. We also had a continuation for 2 more scalps to the upside so far. I'm sure there were plenty more inside there. I've been on the more conservative side today for sure. Another observation that we can make on the S&P, in an attempt to make an optimal scalp, very likely buyers bought 41.50. If they're trying to scalp 42.50 as their target, it has not been filled. It's been tested. So if it does go down 41.50 to 40.50, it's very likely we see buyers defend that 40.50 and 39.50, going underneath it to try to pick it back up to make their life just a bit easier on a return. See if they can fill the 40.50s. There they go. Oh, that snapped down nice and quick. All right. Still targeting a scalp, 40.50. And scalped out. Even that wasn't optimal enough. We could have gone 1 point lower. I thought for sure it'd only go 1. All right, sorry about that. So the PMI news comes and goes just like that. Yeah, I mean, when it comes to the news, we do have 9:45 news. It is a minor news announcement. The next news announcement isn't until 10 o'clock. That'll be the next big one. I think everybody's kind of eyeballing crude oil inventories, mainly because it's going to be really interesting. The crude oil inventories, I did it again. It's the second time I did that. The crude oil inventories, we've obviously got a pretty big break, and they're just ripping to the upside. And as far as gold goes, what I was trying to talk about while I was muted there, gold had that POC, which is now shifted down here. It was a little bit further up. It's just kind of gross inside here. Now we're breaking away. That's what the bulls need. So lots and lots and lots of potential. Man, they almost, they got that dip down there, didn't they? All right. Did they ever fill those buyers up there? They didn't. 42.50. They never filled them in. Use the information to your advantage, huh? Got the 10 o'clock transition right around the corner here in about 8 minutes. Thanks for the live stream. Yeah, definitely. Not a problem. Hopefully you all are having a great day so far. Although it is a little slow. I think we're making it work so far, I guess. At least it's getting something going. You know, yesterday it was like in, out, failed. In, out, failed. That's just couldn't get its running shoes on. If we can get a little bit of a bull transition here, look at the way that the S&P is kind of forming. One big thing that we're really going to have to pay attention to on the S&P is the high and low of this first candle. This first 5-minute range is likely going to be an absolute disaster. And if it just rips through it, it'll likely come back, and it'll probably be a disaster. Or at least a really nice area of support or resistance. Either way, the high and low of this is going to be a big zone. It is a bull bar, so the low of this is more important. Buyers will be looking to buy the low, right? Value buyers are trying to buy the dip, buy it cheap. Nobody wants to buy at the top. Not so interested in this blue box anymore. I feel like we've had plenty of hits off of that. It was just a little bit ahead of it. Might be in for a 3-press low, although it's kind of shady. Makes more sense to see that deeper pullback now. Technically, we can move over here. 14,289 so far. If we look backward from the bottom all the way up to the top, the POC is at the highs. Lovely. The last pullback was over here. 69, which is what it's bouncing off of right now. Pretty big push to the downside, but they stopped dead in their tracks on 69, which is the POC from the last pullback. I mean, you know, part of me wants to go short on this drive lower because we are in a range, and realistically, we haven't broken a new high. We do have some potential trend confirmation in the short term, but in the long term, we're still very much undecided. So, I mean, there's part of me that definitively wants to short this back to the downside, but oh man, that till the tick bounce off 69, that makes it a little bit tough. Yeah, the news that the next news announcement is going to be 10 o'clock, which should have an impact on the NASDAQ. The 9:45 news, I mean, PMI is like a coin flip. Some days that thing's insane, and other times it's totally useless. Look at this pushback. Where did they go to? 14,289. POC just shifted up. It popped up and then is starting to hold to the downside. This may very easily be buyers who got stuck on the rally higher getting out. This would be a third lower high in the sequence as well. So rejection here is a huge red flag. Bulls need to get through this. There they go. Okay. Don't you pull back. Okay. It looked like it was going to snap back for a minute. See if they can get a little retest down in the 90s. Not necessarily 89. They might not even make it that far down, but sellers are very obviously stuck right now. And if they were trying to short to the downside, they are underwater majorly, and it's not giving them a break. That's a really good position to be in if you're looking for longs on the scalp side, because these small little dips, even under a previous candle's low, something like that will be an opportunity for buyers to at least grab a scalp. Maybe a little bit lower. I wouldn't mind 88, 89, but we haven't even had a first entry short. Like, it's just straight up. More continuation to the upside. That's a lot of wick on the top there. $92s maybe? No? This is picking up a lot of speed here. I'm going to throw one, or not get filled. That's fine too. All right, let me see if I can get another pullback. I like this area, and it's picking up a lot of speed, seeming as though we may be gearing up for potential break above the highs. 94s would be a nice little snapback area. It went to 95. That's fine, NASDAQ. Feel free to get those last questions in as we go into the 10 o'clock transition time. Then we'll swap over to the extended session for members and VIPs. We'll see if we can get anything else going for today. Looks like we're starting to pick up some speed. The level indicator, is that a NinjaTrader tool? No, I want to clarify, which level are you talking about? About the DPs in the morning? Like these, if you look on all of my charts, this green, red, orange, yellow lines? Is that what you're talking about? Do both just to file for clarity. Okay, cool. So in terms of the levels that I post every morning, the morning DPs and the ones that you see on the screen with the green, red, orange, yellow, that I use a Fibonacci tool for because it saves time. So if I go into my drawing objects as an example, you'll see my, there it is, my Fibonacci tool. All this is based off of the morning DPs. So if you look at the morning DP levels, let me pull them up so you can see it here comparatively. And then let's go to the morning brief. 10 o'clock. This will be the last question, then we'll transition over. But here you can see 14,267.25, 14,166.20, 62. It's these prices right here. All I'm doing is I'm creating one of the fib levels at settlement and then one of them at a -0.5 and compensating, because I have to offset one, by adding an additional one above. So if you look at the levels, all it is just 0, 100, -100, 200, -200, 300, -300. Remember, I've got to compensate for one, 400, and 500. There isn't a negative in there after that. That's the extra compensation because of the way that I draw it. It's just a Fibonacci tool, and it just saves time doing it that way, rather than doing it, line by line. As far as like how to use them and effectively utilizing them, that is explained in well, actually, that's talked about in a lot of different videos. But the big one is going to be in over here, going to the Academy. And hang on, let me see if I can find it. I think it's under Unit 3. I'm trying to clarify in my brain between the YouTube videos that I've done and the videos in the Academy. Actually, it might be in Unit 2. You mean you don't have them all memorized? Not all of them, no. Nope, not yet. All right, here, let's do it. How do I get into the extended? The extended session is part of the membership. So the join button below the room is one way to get into it, although there will still be a slight delay because of YouTube. As VIPs, they have non-delayed full access at all times via Zoom. So 2 different ways. And then as far as the going over the DPs, go to youtube.com/slingshotfutures. So I think the most recent video I did was actually on there. Let me go search. All right, so one of them is going to be, here, I'll post a link for you. This one goes over the entire morning plan, but that one will also go over the DP levels that we talk about. We've also got... Just look at my videos. Oh, it just shows all the live streams. It's just a wall of them, huh? Okay. I might have to adjust that. But effectively, now that I realize I just loaded up my plate with a bunch of work. Now I've got to reorganize my entire YouTube playlist. But the morning DP levels are more based off of probabilities and standard deviation models. So it's not necessarily a zone of support or resistance, although they do tend to respond that way. More so what I'm looking at in the mindset of how far has the market gone and how probabilistically is the market going to stay there, or is it not going to stay there? So as an example, if we have, like here, this would be settlement, this dash line, and we've got this continuation back to the upside, this is considered half DP up. The likelihood that this actually successfully holds the market down by the end of the day is like 38%, right? It's not very high that the market's going to stay underneath that level. It does act as a nice zone of resistance, as you can see here, and a nice zone of support, as you can see there. But from a probability standpoint, if I'm looking for, as an example, a swing short, this is not an optimal place to look for a swing short. Probability is not in my favor. As we climb up to the -1, the -1 has a higher rating, closer to like 68 to 70% likelihood that the market closes underneath it. That's a little bit better. It's still not as good as it can get, but it's a lot better. You know, in terms of the directionality, if I were to see, let's say, is a lower high transition, and we were hovering around the +1 DP, I know that I've got a lot of things in my favor. You know, we've got a lot of odds that are helping us to try to transition down. This is not taking into effect context or anything. Obviously, I'd rather be a buyer. But looking at this, let's say as an example, I do want to be a buyer, and I'm looking for the most optimal, highest percentage place to become a buyer. Granted that given that settlement is here and we've migrated all the way up to almost a +1 DP before cycling back down, if this were to cycle all the way back down to a -0.5, remember, these are dynamic, meaning that this rotates up. This is +1 all the way back down to -0.5. That means that it is a 1.5 DP dynamically from top to bottom. That starts pushing into the almost 90% probability that the market is going to close above that, statistically. Now, you know how statistics are. Just because it's statistically supposed to doesn't mean it will, right? But this would be an area where if I were looking for a long, I would love to see a viable pattern setup, right? Or something giving me a reason to go long there because I know everything is in my favor. That's more of the mindset of them. It's not necessarily a hard level that I'm looking to buy or sell off of or trade off of. It's mostly a bounce point in terms of statistical probability. Yeah, great question. What price am I using for the settlement? That's RTH. I always use RTH, so I have this separate tab down here. This is RTH only. So when I want to look at the levels, I can very easily see where the close is because it's right there. It's 14,258.75. Or, you know, wherever it happens to be, now that the markets are open. But it's always based off RTH. The only obvious consideration would be Bitcoin and Ethereum, which don't have an RTH. I just use default 24/7 and midnight. That's all I really have. So, but all right. Anyway, a little bit late to the party, but I wanted to make sure to answer that question. Let's switch gears over to the extended session for those of you who are in the morning area. I'm glad to have you here. Hopefully you had a fantastic morning so far. A little bit lackluster in terms of a good chunk of volatility or anything, but I feel like we made it work pretty well. Lots of decent setups. So I'll take what we can get, right? Let's transition over to the extended session. For those of you who are ducking out, I will see you all tomorrow morning. For the rest of you, I will see you back in a couple minutes, all right? Thanks again, and I will talk to y'all later.